Very good morning. Welcome to Trade Live with IG. Myself, Rich McDonald. On this beautiful sunny morning, we've got Sunny Boy Byrne.
Hello again. Hello again.
There it is.
Look at that. Spectacular. Absolutely spectacular.
Scotty, thank you for getting out of your bed and coming in this morning.
Well, I don't like to do it more than once a week, but thanks again for having me on. It's a nice way to get me out of the house. No one's more pleased than my family when I get out of the house, so, especially while the kids are off on holiday. So yeah.
Off on a holiday, as in
school holidays. Yeah, school holidays.
I was going to say he's just been to Amsterdam, hasn't he? Scotty's 18-year-old son's just been to Amsterdam.
Yeah, absolutely. Seemed to spend an inordinate amount of time in the SpongeBob SquarePants experience. Fact. So yeah, that's not a euphemism, but yeah, he had a great time. But he did say, interestingly, it was incredibly expensive, like painfully expensive. Yeah. So that's maybe that's a factor across Europe. But yeah, he did actually make a comment how expensive it was. But yeah. Now everyone's good. Everyone's good.
Oh, cost of living crisis.
I know. I know.
Right. So, what have we got coming up this fine morning? Go. Everybody's in the chat already. You almost think you want to come on and see how much money I've lost in Palantir. Right. Good stuff. We've got opening bell, fast markets, and Scotty and I will be talking about AMD results coming up this evening. We'll also cover that horrible stock that is Palantir. Axel Rudolph giving us a teach-in. No, he's not dialing in from holiday. This was one of his lessons that was recorded before he went away, but we haven't shown it yet. And it's not so much about what stocks are doing now technically, it's how to actually learn the art of technical analysis. Very good. So some great tips there from Axel. 9 a.m. we've got the opening bell, and then 9:10, yes, we've got the Art of Investing episode 3, our podcast with Poppy, who I don't see in the chat just yet, but yeah, we've got myself, Mark Holden, or Spice as he's known, and Mr. CJ Fellingham himself.
Good stuff.
And yeah, we're taking you through. It's a bond special. So if you've always wanted to understand bonds, then you can now learn it from one of the most qualified and experienced people in managing bond portfolios in the UK. And that's coming up at 9:10.
Awesome. Speaking of bond, have you had the call yet from the studio? Have you started auditions?
Are they looking for a new one, are they?
Well, they should. Well, they seem to be. Yeah, there's a bit of golf at the moment, isn't there? I don't know when the next one's due to come out. Next 1-2 years, but
I don't think I'm old enough.
Well, of course, that's always the challenge.
What qualifications do you need? To love your country.
Yeah.
You need to know how to drive an Aston Martin.
Yeah. Scottish.
Scottish helps.
Look good in a tux and a kilt.
Well, I don't know about that. I've got a wedding this Thursday afternoon up in Shropshire.
Oh, wow.
So
very
just
nice.
put in the tux to get cleaned yesterday. £28 to clean a jacket.
Blimey.
Punchy, isn't it?
Is it? Yeah. No, it is expensive. It is
Buy a new one for that.
Yeah, exactly. Well, if you're going to live in South Ken, then that's what's going to happen. I'm sure the ones in Chingford are a bit cheaper.
But I tell you what, the old lad. So he's an Iranian chap, and he loves talking about politics, money, fight. So if you go into dry clean something, you're there for 45 minutes. But he doesn't know that I'm involved in stocks. He doesn't know my background or anything.
Okay.
So he started telling me about all this, this stock market in
he's not long Palantir. He's not long Palantir, is he?
Yeah, my friend put in £10,000 and he's made 4,000. I'm like, that's what's he been long of? And of course, he went through all the usual suspects.
Yeah, he's incredible, isn't it? It's just so accessible. Thanks to shows like this, where the more subscribers we get, the more the word gets out. So we'll get exactly. So if you like and subscribe, you could get yourself.
God, it's an early like and subscribe in there, isn't it?
The same kind of success bracket as your Iranian dry cleaner. So there you go. It's possible for everybody.
Right. Which one of you is long Palantir? Go on, put your hands up. Please tell me somebody's long. We are going into overnight action. We're going to look at that and more. So Yes, we had the numbers last night. They came out about 9:15. It was a strong set. You would hope there would be a strong set of numbers after it's gone up 25% in the last.
You would kind of hope so,
weeks.
wouldn't you? Yeah. Let's just have a look at the.
Yeah, there we go. Raises revenue forecast to 4 billion as AI demand takes off. That was from 3.9 billion. So they've raised their guidance from 3.9, moved up by about 6% to 4.15. So a 6% increase in guidance. Of course, the stock goes up 6%.
That's how it works, right?
Because none of it was priced in beforehand. Nobody had an idea that Palantir was doing well.
No.
It's not like, Trump's children are now involved in hedge funds that invest in it or anything.
No. Why would they do that?
Right, what's that telling us, Scotty?
So that's the aftermarket chart. So that's the all sessions chart, basically. So that was the price action as it reported. You can just see there the little volume spike just after 9 o'clock that my mouse is wiggling around at. So yeah, that was a big move higher. And again, no one really chasing the after hours that they shouldn't. But again, these tech companies are producing not just good earnings, but the outlook for the most part seems to be as big a driver, which is what's going to be, I think, interesting for AMD, which we can touch on a bit later on when we look at that. But yeah, I mean, this is just below. I mean, you could actually see yesterday from the open in the US, all these tech names just went completely gaga. I mean, almost vertical from the open.
Yes.
So after that one-day sell-off on Friday, you could just see from as soon as futures started to turn up, kind of yesterday mid-morning, you could just see exactly what was going to happen.
Rocket ship.
Yeah, I mean, some of it was just vertical from the open, which I've not seen for a few weeks now. So
yeah, so we just have a look at the expected move on Palantir. It was about 12%. So a 12% expected move. Stock is only up 5.
Yeah, 4 or 5.
Stock was up about 5. So it is, for vol will get crushed. Which is going to be one good thing. I managed to cover myself. I didn't cover my short, so I am still short 80 shares, but I did put on a structure for a 3-day trade to buy the 162.5 and short 2 of the 190. So that at least should cover my short losses on the stock, but unless it goes through 190. But definitely going to get hit elsewhere. Not a great one for me on Palantir. So let's see if we can make that up somewhere else today, Scotty.
Absolutely.
What numbers have we got out this morning?
Well, you would
could
just
do with a whiskey, actually.
Well, yeah, I think shareholders for Diageo might need a stiff drink after that. Yeah. Yeah, without a doubt. So there's AMD after the close. What else?
Let's focus on some numbers we've had this morning. So we'll go through to BP in a minute, but Diageo sales missing 20.25 billion against 20.79 expected. So worse than expected revenues. The operating profit's 4.3 billion. They're increasing their cost cuts. And they're saying, mid to single digit growth for next year, so 2026 guidance. And that's including tariffs. So a 200 million hit on tariffs. They've actually put a number on it this time. And CapEx dropping as well. So they're cutting CapEx, they're cutting other costs. Clearly a little bit panicked about the way that those sales are missing forecasts.
Yeah, I mean that's not a pretty chart. If you want to take a look at the chart, that's up on my. Yeah, I mean that's I mean that used to be such a darling, wasn't it? Really. If we just kind of look a bit.
It was. I guess what 2016.
Yeah,
14, 15, 16. That traded at a real premium.
So that's a weekly chart there, and look, that hit the real peak at the end of COVID, where everyone started going out, it's unfortunate having a brand stable like they do that's been so good for so long. Once those brands become tired,
have they got the brands wrong?
I mean, I think
they're trying to say Don Julio's done well in this quarter. Sorry, that's a Scottish version.
Yes,
Don Julio.
Yes,
and Guinness has done well. But the rest, is it a tired brand set, do you think?
I mean, I think the price action is, I think saying to you it is. It's actually nowadays, I mean, if you were to take my son's age group, a lot of them will have a couple of shots and then they'll head out for an evening. So they won't stand in the pub and drink and drink and drink. They'll just have a couple of shots,
right,
and they may go out. But there's not the consumption of the standing at the bar ordering from the range of taps.
Like you and I used
to do. Yeah, absolutely.
Used to do.
So, used to. Well, yeah. Well, yeah, exactly. Of course, I don't go out anymore. I just focus on the markets.
Right, so yeah, we'll get a price indication for you there. Let's see if I've got an update. But we move on to British Petroleum. Now, of course, BP, huge day yesterday. Take us through the discovery that they've made.
Yes, interestingly named oil field off of the coast of Brazil, which is obviously that's been a big source for BP for quite a long time.
Yeah.
When you see these big companies like BP that seem to have done not a great deal for quite a long time, there's suddenly a new discovery. I mean, they are well positioned for utilising these new discoveries.
Yeah.
The CEO is very excited about it.
How do you say the CEO's name?
Oh, sorry, where?
Murray Auchincloss.
Oh my goodness me!
You've got to say that in an angry fashion, don't you?
Yeah. I mean, there's no way to. Auchincloss, yeah, crikey, is that some sort of a stone outcrop? Is that a rocky outcrop, an Auchincloss or something? I don't know, but yeah,
will be.
Yeah. I mean, look, he's he's had that very well timed after that strategy reset. That's really well timed for a CEO.
Yeah, if your numbers aren't going to be that great, put out the biggest discovery in 25 years the day before. How about that?
Yeah. Well, I mean, look, and the reset again, I mean, this is another interesting thing, right? There's this little segment in the Times where he's got the strategy reset after its ill-fated push into green energy as well, So these, these firms are turning away back to strength, aren't they?
So the numbers that are the important ones, we've got a net income of 1.63 billion. For BP, that's the net income for Q2. Their net debt came in at 26 billion. There's an 8 cents dividend in there, so it's not even 2%, 1.6% dividend.
Yeah, that used to be a dividend darling, didn't it?
But you got a buyback. You got a $750 million buyback.
That should get them going.
And 3 billion of divestments so far and 7 billion of cost cuts. But that's not enough. Murray wants to Auchincloss some more costs. And he's going to do another cost review on top of the one he did in 2020, another one he did in 2024, and now he wants to become one of the most efficient providers out there. So, yeah.
That sounds like something that's going to upset all the sustainable fans, isn't it? Because I would imagine that's going to be one of the first things that gets reviewed again, is more spending on sustainable energy.
Yeah, that's going to get cut, isn't it? So, yeah, just to go back to the newspaper there, of course, reminding us that the company under pressure from hedge fund Elliott, and then and there's the two people that found the oil in Brazil.
Well done then.
The thumbs up. Yeah, they're
well done then
for a nice bonus.
That's right. Yeah.
But yeah, a reminder there. Apart from Bumerangue in Brazil, they've got production in the Gulf of Mexico, of course, Azerbaijan, Angola, and of course up there in Aberdeen.
There you go.
But yeah, it doesn't have any production in Brazil yet. But this could be up to 1 kilometre of a stream that they've found. Now, 500 meters is big. 1 kilometre is almost unheard of. So this, any concerns you had around BP's production tailing off in the 2030s, this takes them through to mid-2040s, potentially. So the stock was only up 1.5 yesterday. You couldn't really buy it ahead of numbers today. You kind of wanted, because this is huge. If you just, Palantir is almost the opposite, right? People getting very excited for this next 3-4 years. BP just made a huge change to their year 7, year 8, year 9.
I mean, if you think, that's had, since that horrible disaster years ago. It's just been such a slow mover, isn't it, for a long time?
Yeah.
Maybe this is the catalyst that helps to bring it forward back into the minds of people. Yeah, without a doubt.
So yeah, BP one to watch this morning. Diageo one to watch this morning. We have briefly on Mango. I feel your pain. Also, Mango shorts and Palantir. If the good thing is, if I'm short a lot of calls, rather than cover it, I think I will go bigger. If this trades 170 on the open, then I'll double the size of my stock short. Because let's just work through. They beat EPS by 2 cents, right? A 2 cents beat on EPS. Well, the stock's on what, 500 times earnings? So why not just take
573 or whatever it is? Yeah.
573.
Yeah.
So let's take that 573 and multiply it by the 2 cents, and we'll just put all that on the stock price today, shall we?
Yeah, absolutely.
So that's why, if it goes up to $170, that's exactly what's happened.
Yeah, I find it very difficult having rational conversations around these kind of companies.
Yeah. But quite an interesting investigation by the FT today, talking about, well, there's two investigations in the Financial Times. A really strong edition of the Financial Times this morning, reminding us that Producer Phil, we're on our last day of subscription, and Producer Phil has so far failed to renew any subscription.
Oh, there's going to be some frantic tapping going on.
I have to take my earpiece out for a second.
That
was a lot of bad words all in one sentence.
Exactly.
Right, so they have penetrated the Iranian covert mission to Russia to try and get Iranian hands on. There we go. That's
an interesting.
I bet that for an artificial intelligence.
It's an interesting graphic, isn't it? It's a proper, yeah.
So last August, a group of 4 Iranians landed in Moscow on diplomatic passports.
Okay. Under
the cover of no, it wasn't just a lad's trip to the Kremlin.
That's right. Yeah.
They had discussions, visited certain factories that they would need to, but quite concerning about the lengths that the Iranian regime is prepared to go to ready itself with potential nuclear weapons.
Yeah, I mean, I just think it's in that position where it will constantly like to thumb its nose at the West, but also knows from the position it's in, the West will come to it and just go, listen, let's sit down, let's get these things fixed. So it's not exactly a wonderful position to be in, but as far as they're concerned, that's something they're most probably not unhappy to leak as well. But
a very good read if you're into the spy novels. And what's the name of the author that does all the great spy novels? My father used to read them.
Oh, good. Frederick Forsyth.
That's the one. Yeah. This reads like a true beginning of a Frederick Forsyth.
Just go back up as well. We see the passports are. It's the next paragraph up, a sequentially numbered passport. So hot off the printing press. Passport number 1, 2, 3, and 4. Yeah.
Yeah, exactly. Classic. Good cover story, guys.
Yeah, exactly. Yeah, well done, everyone.
Right, but that's not the one that I was looking for in the FT. If we can just come off that quickly, please, Terence. Thank you very much. We've also got now. Where is it? A talk about how much cash Peter Thiel is managing to get from Trump. So the big, beautiful bill included in page 723. China. No, it's not China.
Yeah.
The one
China.
Big, beautiful bill.
That is the one.
They got the wrong button there, didn't they?
Isn't it just?
So yes, in page 723, there is a provision which gives this Anduril almost guaranteed slice of 300 billion earmarked to modernize US military. And it also talks about lower down the Trump family being brought in to invest in stocks like Palantir. That's capitalism.
Blowing Nancy Pelosi out the walls. Nancy who? I mean, yeah, look at that.
They were jealous of
autonomous surveillance towers. You're going to love it, aren't you?
So a good work by the FT today in a couple of great articles there. So we have got a couple of minutes now before. Well, actually, yeah, I've been told there's a special treat for us this morning in our Guess the Chart. So I don't know what to expect here.
Absolutely. Phil did say to me I should look out for a couple of things. So yeah, this could be interesting.
Right.
Now, as much as this is, actually, speaking of Trump, as much as this is the only show to watch for all your financial needs, then it's probably worth, if you get the chance, to tune into CNBC today at 1 o'clock, because Trump's going to be on CNBC.
Oh, yeah. Yeah. Okay. So 1 p.m. today, you know.
That's got to be worth watching, isn't it?
He's got to defend himself in sacking this Labour statistics.
Well, exactly. And normally we would never look to promote inferior financial news channels, but on this occasion, for pure entertainment.
I tuned in this morning. They're talking about Infineon and just, it's so European, it's painful. Right, let's have a look at what producer Phil has knocked up for us with the help of James Watson. And I would suggest...
US stock.
So
wow.
It's a US stock, but also turn up your volume a little bit. This is one you want to have on. And yeah, for once, don't run off and make yourself a cup of tea.
Wow.
Are we ready?
Yep, let's see it.
Let's go to Guess the Chart.
Wake up, traders, time to start. We're zooming in on lines and art. Candles dancing red and green. Is it crypto gold or the S&P? Producer Phil has tried really hard to try and make you guess the chart. Indices, FX or commodities, every stock for all your needs. Here on Trade Live with IG. Can you guess the chart? Guess the chart. What do you see? Moonshot ride or fake out spree. Lines are moving, it's your part. Put your money where your mouth is. Guess the chart. Indices, FX or commodities, every stock for all your needs. Here on Trade Live with IG. Can you guess the chart? Will Rich guess the chart? Will Rich guess the chart? Can you guess the chart?
I am lost for words.
I mean, who needs Oasis? We are the Nolan Liam of the financial market.
That was
Yeah.
Parky 1977. I wish that was me singing. I wish I could sing like that. You don't want to hear my version of the Proclaimers. That was absolutely fantastic. Massive credit to producer Phil and to Dr. James Watson there.
First class.
Yeah.
First class.
Oh, Boise, you say that's never going to get old. I think apparently they've got some more different versions of it. But what was the chart? Well, I saw R6 Senna getting in there very early with AMD. Well done. Great spot.
Incredible.
It's pretty much identical share prices NVIDIA. You know, a couple of people went for NVIDIA, but no, it is AMD ahead of numbers this evening, which we'll cover preview for at 8:15. But did you guess the chart?
I know. See, already it's catchy. There's going to be people singing it. Exactly. You're doing your washing up later on. Can you guess the chart?
Right. So, as a special, the likes that you hit now on the screen are for that new song and Dr. Watson. So hit that like button, please. The big thumbs up underneath on your YouTube. And that would be great. Right, let's have a look at some pre-market prices. We've got opening calls. BP up 1%. BP up 1% on the back of Q2 results. A reminder that Q2 adjusted net was 2.35 billion. Diageo. So that's interesting. BP, they've got away with numbers, right? Because numbers haven't been great. But then you've got that upside call of the production discovery.
Yeah, it'd be interesting to see how the next few days how they behave. I mean, energy has been strong in the US for the last few weeks, so could be interesting to see if any of that filters across.
Diageo, I'm surprised, up 1%. Diageo looking up 1%. So fingers crossed that is correct. It has been dismal into it, hasn't it? As you showed.
Yeah, yeah.
Right, Lloyd's. Oh ho ho ho! He's only got it at the jackpot. Goldman's, raise, Lloyd's to buy.
There we go.
Price target 99 pence. Palantir, jog on.
Once the most boring banking stock on planet Earth, now all of a sudden it's the Palantir of UK retail banks.
It is Lloyd's, Palantir, TSB. Beautiful. I loaded up all through the day yesterday, so we've got a nice bit there. I used Barclays as a bit of a hedge, NatWest as a bit of a hedge. So just wait; those two will be upgraded as well.
Yeah, that's right. Well, I mean, NatWest especially has had a proper run ahead, hasn't it? So yeah, I would imagine.
Feels those two have gone. So let me know if you managed to get on the Lloyd's train there yesterday as well. Beautiful price action as well. It was one of those ones where you know you've got the long fund buying it.
Yeah, exactly. Yeah, you will do. Yeah, you absolutely will do.
Or Goldman's.
Yeah,
They'd never do that, would they? Right, let's see how it performed during the day. So yeah, it was a nice. Yes, we peaked there at about 9:15. The drop was bought though, and you saw it finish pretty much on the highs. So you can see I got 4 different purchases throughout the day, and we've got those hedged against a bit of Barclays, a bit of NatWest, and a bit of FTSE.
Like it.
Right, we are 7:58. Let's see what else we've got here. Smith & Nephew up 2%. Remind us what Smith & Nephew do, Scotty?
I think they make medicines for people like me, don't they?
Is that, or is it? It's not. No, prosthetics was. They're definitely medication, but I can't remember if they're like artificial limbs and stuff.
I don't know why you asked me if they make prosthetics or not, but exactly. I'm not sure if I should be. I'm not sure if I should be pleased or insulted, but.
Fresnillo down 2% on their H1 numbers.
Okay.
And Barclays have been raised at RBC. Brilliant. 435. So Barclays will probably be up a tick as well. Domino's Pizza down 2%. They have not delivered. You've got 10 seconds left. Let's see if there's anything else. So Travis Perkins down 1% on their numbers. Domino's Pizza's down 2%. And Scotty, over to you. Let's see what's about to happen.
There we go. Nous sommes ouvriers, we as they
right,
say in France.
BP, they were correct. BP up 60, well, to 80 basis points, £4.10. But a lot of talk in the newspapers there about the discovery yesterday. So the FT covering that. Look at them. They're getting bought as well. 408, 409, 410, 412, 413. It's like an auction getting bid up for BP there. Same with Lloyd's, 83.48, up 1% on Lloyd's. That is a true breakout. The chart breakout there. Fresnillo, however, leading. So Fresnillo, let's just, Scotty, do you want to go through what else you're seeing there?
Yeah, absolutely. Again, this is what we're seeing. It's another nice, cyclical move higher as well. Rolls-Royce, which we're like now through 11 quid. Rolls-Royce, good to see. Travis. Flutter, Barclays, Entain, yeah, that's some...
Roller's 11 quid.
Amazing, isn't it?
It's unstoppable.
There's just, I mean, I think at the moment, I think that would just become, in fact, I was looking on the IG ranks last week, 596 people liked them, and 6 didn't like them. It's just one of those stories where no matter what, it just looks unstoppable, right?
So Fresnillo was EBITDA of 1.1 against an estimate of 971. So Fresnillo, good numbers, up 5. We've got
Travis up 3.5.
Right, so numbers, yeah. Andrew McKelvey. Don't Smith and Nephew make new hips for old hurdlers?
Boom, look at that.
Boom, boom. Hit him where it hurts.
Absolutely.
I tell you what, the way I actually have I've done something to my ankle as well. I think it's playing paddle. Can't teach an old dog new tricks. Try to learn to play paddle.
Absolutely, yeah.
Right, we got, but yeah, so strong day on the FTSE there, it feels. Glencore higher. We've got IHG ahead of numbers later this week. And producer Phil watching the auctions for us. What is not uncrossed yet, Phil? Smith and Nephew, neither. Diageo. Diageo hasn't uncrossed either. Oh, don't know. I actually don't know which way it is.
Interesting. Travis actually reported a 24% drop in first half adjusted operating profit, but yeah, up 3%. Just goes to show the market's expectations versus reality is always a bit of a...
Yeah, shall we have a quick look at what they've done into numbers then? Because sometimes stocks move into numbers.
Yeah, the travel and arrive, the
anticipates,
classic travel and arrive.
So, like some stocks go up 25% and then they raise guidance by 6%. And
yeah, I mean, that's certainly not done that. It's not a pretty...
So Travis, that's, you can, kind of that tells more of a picture.
Yeah, it must be in the category of less worse than, rather than, better than.
Right, talking about less worse, Puma up 1.3, Siemens up 1.2. You got SocGen, Ryanair all on the leaderboard. Rheinmetall up ahead of numbers this week. And Heineken is up. That's interesting. So I wonder if that gives us a steer that Diageo is actually all right.
Yeah, maybe.
And then, Anheuser-Busch InBev, the complete opposite, down 40 basis points. So no real guide there how this Diageo is going to open.
I suppose InBev, though, as well, can sometimes be a bit of a red herring because of all the emerging markets exposure as well. So that's, that can sometimes be...
One of the biggest deals of all time, wasn't it? Anheuser-Busch taking over InBev. That was
a biggie, wasn't it?
We had it as well. We had about $20 million of it for the bid. It was a big day.
Yeah.
So yeah, for 4 million P&L day, I think.
Yeah, very nice.
Mr. Denjois. Right, we are. We got 1 minute till these Diageo uncross. So Fresnillo is kicking on now, up 7, and Diageo up 1.8. Let's have a quick check on the commodities for you. Oil 65.60. Gold's given some back today. It's another strong day yesterday, but it's sticky around that 33.70 level.
Yeah, up to about 3,400. I haven't seen the options and what they look like in it, but I would imagine that's pretty clustered up to 3,400. I think the Goldie's call actually was the Goldie's call last week, 3,400, 3,500 if I remember. That rings a bell, so I would imagine that's got some decent open interest there.
Yeah. yeah, it just makes sense. A kind of steady move higher as the US goes into a recession.
Yeah, exactly.
Platinum regaining some ground. That was had a bad week last week, but trying to rally there. And copper, right? Diageo is up. It's higher.
4%. Goodness me.
Wow, Diageo. So that's an interesting one. So it
There we go.
It went into an extended auction because it was uncrossed more than 5%, and then only opened up well, there you go, 4.7, not far off. So that's interesting.
Good technical know-how.
Diageo, the numbers were not great. Smith and Nephew is
Crikey, there must be a lot of hurdlers needing new. There must be a lot of hurdlers needing new hips in. That's all I can say. Crikey,
just buy everything.
it's shit. I mean,
And then OMI up 12% on drilling figures as well. Thank you very much, Andrew.
oh my goodness, what a move. Sorry, so I won't get invited back if I keep making dad jokes. That's what my kids tell me. I'm never going to get invited back.
Mate, if it's you or Ronnie, you can make as many dad jokes as dad jokes.
Dad jokes, even better.
So right, well, God, I'm looking forward to opening my ISA today. Then Diageo on the ones to watch. I felt like a right idiot this morning when I saw the numbers first cross the tape and it looked like a miss on the revenue line, and I thought, well, that's on the ones to watch. Rich McDonald's ones to watch on the platform.
Yeah, absolutely.
First profit warning. Thankfully, we
If you're
can't
opening
put
your
shorts on
laptop
there.
though in your ISA, it's like the scene from the Pulp Fiction movie, the gold rays coming out. Yeah, exactly. Look at that.
Right, so these mining stocks are trying their best to recover as copper is. Lloyd's and Barclays up the same amount. I haven't seen NatWest this morning. Let's scroll down a little. Anglo of the Americans, £20.88. That's come off. You know, that was 22 quid.
A little bit muted for BP. Would you think maybe up 1.3% now? BP, is that a bit muted? Do you think after discovery?
Well, so that was yesterday. Remember, oil was weak yesterday.
Okay, yeah.
And BP was up. So there was a BP should have been down 1 yesterday, and it was up 1.5.
Okay, fair enough. So yeah,
that was the
I suppose
discovery.
net over the 2 days. That was the.
Yeah, and then okay, but 411 still making ground from the £3.50 they were, you know, for most of April and May.
Yeah, no, absolutely, yeah.
EasyJet, don't know what to do there. 492. I always want to buy EasyJet under £5, but they don't ever come out with anything, you know, really exciting.
It's interesting. I was, as I said to you, I think it was last week, how busy the airports are at the moment. And to be fair to EasyJet, I mean, I've flown a few times this year, and EasyJet, you just can't beat them.
I completely agree.
You just cannot beat them. It's just very rarely any issues. Always, you know, fairly smooth run.
Yeah.
It's not like the old Ryanair 1 hour flight has a 3-hour window, so they can still leave and arrive on time. But
And I don't think EasyJet staff get paid commission to charge you to take your bag on.
yeah, that's a natural. Yeah, I saw someone at a Ryanair gate. I was flying out of. I think it's a couple of weeks ago. I was flying out of Italy. Someone was flying Ryanair and they had their case and it was just sort of, you know, sticking outside, and they were literally standing there letting the guy kick his case into shape.
Yeah.
I mean, it's
You see people
outrageous.
break their cases rather than pay.
Yeah. It's just outrageous.
That is the
Just
kind of
outrageous.
thing that I would be the kind of person to be very patient, and I would wear 7 layers of clothes
Yeah.
before I gave them a single pound.
Yeah, absolutely. Yeah.
Right, back to the moves then. Yeah, they don't know what to do with BP. It's up and down. That stock's doing well, isn't it? Wonder, just, you know, completely out of context, nothing to do with any stock that's on screen at the moment. I wonder what market cap you need to get into the FTSE 100 nowadays.
That's interesting,
Yeah.
isn't it?
Producer Phil, let's have a look let's do a poll. What market cap do you think you need for automatic qualification to get into the FTSE 100? Is it 2.8 billion sterling, 3.4 billion sterling, 4 billion sterling, or 4.4 billion sterling? All right, let's get that poll. Producer Phil asking if I know the answer.
Of course he knows the answer.
No, I made up random numbers.
Yeah, that's all part of the excitement.
So yeah, let's just have a look at what is the automatic qualification to get into the FTSE 100, just as a little exercise. No thought behind it at all.
Yeah, I'd be very interested to know that, actually. I mean, I was listening to episode 3 of the podcast. You were talking about the market cap of AstraZeneca versus Nvidia, and what was that, 0.2 trillion versus 4 trillion or something? So yeah.
0.22 of a trillion. I mean, it's mind-blowing, isn't it? Rio's trying to get back above 45 quid. Let's have a look at iron ore. We haven't looked at iron ore for a few days. Yeah, it's holding its own. It certainly was the better one to be in than copper.
Yeah, is that? Yeah, I meant to look at copper actually. It was forming. I did see yesterday. That was actually on our newsletter. It was forming a bit of a base yesterday. I'm just trying to form a bit of a base.
Yeah.
Yeah, that's just crikey. That's just.
So that's all. So we got to keep our eyes on China, for what is going on there. And right, what have we got then? We've got ASML has been absolutely rubbish for me. So you can see I bought some at 640 on the show. I bought some more at 616 and then bought some more at 600, and we're just we're 0.5% above that. So
systematic DCA, Rich. Nothing wrong with a bit of systematic DCA.
I'm DCAing. What else could DCA stand for?
Oh, crikey, I dread to think. Actually, that could be another poll later on.
Yeah.
But, yeah, PG-13 answers only, please.
Desperate. Something accumulation.
Yes, that's right, yeah.
Desperate crap
Chart accumulation.
Yeah.
Desperate chart accumulation, yeah, exactly.
So we've got... I've got 60 ASML at the moment against Eurostox. I'm short the Eurostox against it. And you can see there my Palantir. Well, where's...
It's just looking towards the bottom there.
There we go. Palantir short 80. That's going to cost me today. We lost $1,000 in that. What I did do yesterday was sell this 145 put. Right. Okay. So I know some people don't like options. They don't trade options. But the idea behind that was the stock was trading at 160. I didn't want to close that short because we looked at the valuation yesterday, and in 2027 it's on 150 times PE ratio. And I said to Chris Beecham, if it's above 80 times 2 years out, I've got to keep this short running. So I kept the short running.
Okay.
So I was fine with that, but I knew there was a chance I'd lose up to $1,500. So I wanted to cushion that. So I cushioned that by saying, right, if Palantir goes down tomorrow, I will buy back my short at 145, and people pay me $420 for doing that. So it's like I'm selling insurance at the 145 level. So that's at least $420 I'll get back from the 1,100 I've lost.
It's actually a very interesting approach when you have positions, if they're winning or losing, because you have to keep your eye on the directions up and down if you're winning and losing, because you can then just get fixated on the one direction of travel. And all you see is the pain points rather than saying, okay, if this happens, where would I want to close it? In a dream scenario, where would I want to close it? And that's what people get rabbit in the headlights when you've got a position. And it happens to everyone. It's happened to us. And you only learn that you have to give yourself that mental breathing space and just say, look, if they have a complete disaster, yes, I'm short now, but I'm not short with an expectation that they're going to go to zero, because they're clearly not.
Exactly.
So where is the kind of level that I want to be interested in? And then you don't have to wait until the event and then submit an order, because when they start coming off, you'll then go, oh, instead of that level, I might look to pay a bit lower.
Exactly.
And then you pin yourself into that behaviour rather than have it beforehand. So you've got your scenarios, then you can react.
So I tell you, after the break, let's do that. Let's do that something like Lloyd's.
Yeah.
Right? Where do you start taking profit, and where would you buy more, and what, you know, how to hedge it and stuff like that. So let's look at some of that after the break, and also we're going to take a look at AMD. That's the other one.
Yeah, absolutely.
Right, we'll see you in 2 minutes. No lovely songs this time. Back to the old adverts.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Okay guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat, come on. Cash returns, come on. Oi! Well, you're not going to get better than cash returns. Cash returns, come on.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
nothing beats a Jet2 holiday.
Absolutely. Yeah.
Right now, you can save £50 per person.
That could be the voiceover for the next advert, because that lady who does them is making herself very visible on social media. So if anyone wants voiceover,
She's going into
voiceover
radios and everything. Should we
Yeah.
get her on?
Oh, could you imagine? She could do the All Sessions opening bell or something with a.
Producer Phil, sort that out.
Exactly.
We need...
First job, FT subscription. Second job, get the Jet2 lady, Jet2 voiceover lady on the show.
He's been meaning to get LSE to sponsor our opening bell. We'd look at that rubbish. that we've
Jet2
got
could sponsor it, and you could have the Jet2 lady on.
Get ready for takeoff.
Oh, imagine, yeah. Oh, it's so good,
Right.
so good. Right, anyway, markets.
That's £200 for a family of 4. Let's look. Why am I talking about Jet2? Well, we're talking about FTSE 100 automatic exit and entry. So, Scotty, run us through how this works. What's the number on the left-hand side?
So that's the FTSE rank. If you now, even that's the FTSE 100 for all you Anorex out there. There's actually 102 stocks in the FTSE 100 because a couple of stocks have additional listings. But basically, that is the if you like liquidity rank of the companies on the left-hand side. So if we just take it that it's the top 100 are FTSE, all those you can see there's 102. But yeah, so something like Barclay Group.
That's in the danger zone.
You could say, yeah, that is in the danger zone, absolutely right. And so when you have a new entrant into an index, a lot of people say, I mean, a lot of the press will say, oh, you know, XYZ has joined the index, and then it underperforms because what generally happens is forecasting for attaining a spot in an index happens weeks out. Because there's lots of index specialists out there. So there are criteria that you have to judge, and the eligibility is main listing must be in the UK on the LSE, must have sufficient free float,
Right.
but also sufficient liquidity. So just having a big free float is not enough. It's got to have a certain liquidity threshold. It trades every day. So it trades every day for it to qualify. And so if it were to pass all those, that's where you'll see some of these entrants are coming up, and they'll just slowly grind up. Then once they achieve entry on the quarterly rebalancing, or sometimes ad hoc if they're explosively moving. But yeah, normally 4 times a year you get the changes.
So 4 times a year,
Yeah.
the committee will meet and they'll say, right, Berkeley Group is now 104th. If that moved down to be 111th, then it's just gone, isn't it?
That's correct. As long as the qualifying stocks still meet the criteria of the appreciation of price,
Right.
liquidity and so on. But there's a bit of a game going on here because generally even index funds know that these things are pretty much surefire to go in. So there's a supportive element of that anyway from the marketplace.
So yeah, so 110 and below, that's your automatic exit. What about as we go higher here into this automatic entry position? So that seems to be at number 90.
Yeah, absolutely. So that will be, so you will see a bit, if it's a bit like a horse race now that you'll see. So the next, expiry is going to be the 3rd Friday in September.
Okay.
I don't know, it's generally around kind of 17th, 18th, 19th. So you'll start to see, so if you were to take a list for the people watching at home of those names, you can track them and you could see a bit like a horse race who the runners and riders are. So the closer you get to that 3rd Friday in September, I think there's an announcement generally about a week before who qualifies.
Right.
So they meet
mid-September 20th.
Exactly. From now over the next, say, 6 weeks, it's a bit like watching a horse race. So you'll start to get an idea who the runners and riders are.
And so the runners and riders at the moment would be Spectris,
Yeah.
Aberdeen Group. They're back up there. So Aberdeen.
Yeah.
So they're in the 250.
I mean, that's
Investec
a proper
are in the
rescue from
250.
Aberdeen, isn't it? Yeah, absolutely.
But you can see, so in this column there, you can see Taylor Wimpey, Unite, Persimmon, and EasyJet, all with a market cap of around about 3.7 to 3.9 billion, are below Spectris.
Yeah.
But there's no automatic until Spectris would be something like 4.5. So 4.4 to 4.5 is the right answer
Yeah.
on the automatic qualifications.
Yeah,
So
absolutely.
on the poll that we did, 9% of you are right. Only 3 people there. Well done to those 3
well
people.
done to those 3, absolutely. And looking at that list as well, I think sales traders and traders across the city are hoping that number 107 does not make it in, because you don't want to be shouting out price and size in Tritax Big Box REIT 50 times a day. So that will soon get some kind of acronym or nickname if it were to make it in. So yeah.
I didn't actually know that Jet2, but it must be on the AIM for a reason. There must be one big owner or something.
Yeah, that's right. And again, and that's why you got about the free float and the liquidity. So if the free float might be there, but if it's held by 3 investors,
Right.
then that's not broad liquidity. That's just a component of what might happen to it.
And for those that don't know, what is the AIM market, AIM?
Alternative investment market. So that is for companies who generally have a shorter track record, but also as well, there's certain things around the ownership structure which restricts it from being listed on a larger marketplace. Yeah, so that must be definitely something around the share ownership structure there.
Right, let's have a quick look at the top of the FTSE. What are the top 10? Always interesting to look and get an update. HSBC, number 1. AstraZeneca, number 2. Shell, Unilever. BHP is gone. Santander, was that in the FTSE? Or is that just the UK big companies? Don't know about that one.
I don't know, actually.
And then Bats, look at what Rolls-Royce has done. That, of course, is racing up. That wasn't even in the top 10 not so long ago. Incredible, isn't it?
It is incredible.
And then Relics, the stock that nobody talks about, it's got about 4 different businesses, one of which is putting events on. And conferences
okay,
and
yeah, I
things
never
like
knew
that.
what Relics did, actually. I'm very ignorant of that one. Very ignorant.
BP, Rios, GSK, BAE Systems. So yeah, really interesting. That website is stockchallenge.co.uk. Stockchallenge.co.uk and then FTSE. And that's how you keep a track of that, which of course some of our old friends used to do. That is their job. They
it's
run
their game,
hundreds of millions.
Yeah, absolutely.
Predicting that.
absolutely, yeah.
Okay, AMD, Scotty Byrne. Let's go through the tasty earnings preview with their wonderful animations.
Is that tasty? Is it? I love
Tasty,
that.
yeah. Right, can the rally continue? That's the question. What are you thinking going into this?
Well, it's quite interesting because the headline numbers or the expected earnings don't actually look as exciting as you would think, because they have been a bit hit by restrictions into China.
Right.
So this has got a bit of a risk of a bit of a travel and arrive. Interestingly, if you look at Seeking Alpha, the last 90 days, you've had 28 EPS revisions lower, but 6 EPS revisions higher.
Wow.
So this could be starting to splutter a little bit. But again, with this, it's all about the expectations. Like same as the Palantir earnings yesterday, the same as we've seen for the most part for the tech companies last week.
Yeah.
You know, spend they don't mind, expansion they don't mind, but you've got to look at China and then the upcoming next quarter's forecast. But yeah, it's a difficult one. I mean, as we were talking last week, we had one of the viewers wanted to short them. Again, these sorts of trains that are going like this, I said yesterday, the tech names in the US
You did say that.
just completely took off almost vertical. I mean, AMD was up 3% yesterday. Just a incredible move, really. Let's just get, oh crikey, no, that's not the chart, chap. Sorry, that's completely messed me up. Sorry.
Well, I'll just quick while Scotty's finding that. So AMD expected to post earnings per share of 48 cents on 7.4 billion in revenue. That would compare to an EPS of 69, on 5.83 billion in revenue a year ago. Last quarter, AMD's EPS came in at 96 cents on revenue of 7.4 billion. Analysts, mostly bullish on the stock, 42 strong buy and buy ratings against the 15 hold ratings, and zero, zip, none of the analysts are saying sell or that the stock is a strong sell. The average one-year price target is $155, representing a 12% decline from today's $177 share price. So no analysts say sell the stock, but their average price target is 12% lower.
Well, it's interesting. I mean, if you look at the session yesterday, I mean, this is only an hourly chart, so it looks a little bit bitty. It's not ideal, but you can see from that initial vertical lift high, there was no real impetus to push it further on into the bell. So there's obviously a few doubts in the investors' mind, even though it has been a darling. Yeah. It has to start showing signs now, because a lot of the narrative around it about a potential NVIDIA competitor. Now, NVIDIA is able to sell into China. These guys are not. If they can't convince the market that they can continue to slowly eat away at that market share, so this could be a bit of a crux point for them.
The call will be very important, I guess. So what you might actually get, you might get a bit of disappointment on the number.
Yeah.
And then they manage to talk it round on the call.
But things like the China restrictions, I mean, unless you get a special, I think this is the catch-22. NVIDIA is so big and important that it's for Trump to just organise a bit of a waiver. But again, unfortunately, they're not big enough to force the government into leaning on the Chinese to help them export. So yeah, it's going to be quite an interesting call, actually.
And then, yeah, if we can just go back to the tasty preview. So AMD trades with an implied volatility of 31, right? So 31 implied volatility rank. That means volatility is below average compared to the past year of trading. The options market expects a $13 move in AMD. It's about 7%, 7.5% of the current stock price. That's within the average 5 to 10% earnings move for these S&P companies that we've seen in the tech world. So will be very interesting. The previous high was $187. Will we see that? That's pretty much exactly the expected move from where we closed last night.
Interesting stuff.
Right, Scotty, that's AMD. Cool. It's almost time for us to hand over to Axel
Already.
So we'll be back for the all sessions. Don't worry.
There we go.
With our Jet 2 woman. That's got to happen.
Absolutely. Imagine.
Right, we're talking Elliott wave here, and positive and negative divergence. Axel. Tuning in from Turkey to give us RSI and Fibonacci's as well. Coming up after the break,
exactly,
your technical...
Shakira once sang, the fibs don't lie.
I don't have any answer to that. I'm just expecting
so tune in,
to the...
tune in, like, subscribe. You'll get everything here.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello and welcome to Technical Analysis for Pros, where I'll be covering a simple Elliott wave ABC correction, because I quite often talk about it in Technically Speaking, and I haven't really told you how to look at this. And I'm not going to go through Elliott Wave's theory because that can become a bit more complicated, but I'm going to show you what a simple zigzag correction looks like and how you can spot it yourself and why this pattern is something that you can actually trade quite successfully. So basically what you usually see is a trend either to the upside or downside. In this case, what I've chosen is an S&P 500 daily chart. And as you know, we've been in an uptrend there for quite a while. So you've had an uptrend last year, for example, and then what you did see here is, and this is the sort of pattern I want you to spot. It's not easy to see at first glance, but you can see here, we've had a move down, move up, and move down. So this could potentially be an A, B, C correction. So what I'm looking for is a move down, and that itself can also subdivide into 3 waves, for example, but let's ignore that for the time being. Let's just look at the distance from here, from that high to this low here. So we take this distance here from around, let's say, 5,670 down to around 5,390. And that distance here, if you project it downwards from the correction high of that down move, so we go down, that's the correction high here, up, and then down again. So if you take this distance here and project it lower to the downside, that gives you a potential area where the ABC correction might end around here. It didn't quite end here, it went further down. But basically, once you see this pattern down, up, down, in the direction of the overall uptrend, what you're interested in then is to see a continuation of that uptrend. So what we saw here is the market just struggling. Then we had a bullish candle here. Then we had a close above the previous reaction high here. That potentially was a bullish signal. If you wanted to wait for other confirmation, what you could have done is basically said, right, I want to see whether I also have a trend line break. So you could have a resistance line drawn on here. And you could say, okay, if that's an ABC correction, I want to then go long here on the trend line break. And in this case, you had a valid break here, and you could have gone long there, for example, with a stop loss probably below the last reaction low, the one of this ABC correction. And this would have worked quite well going forward. Now you can spot other ABC corrections. Here, for example, there's another one here. Can you see we were still in uptrend? We go down, back up again, and down. And this down move from that high to this low here is slightly longer in length than from this high to that low. But you can see it's the same sort of zigzag pattern. Down, up, back down again. Again, we look at support perhaps forming here. We held at that support, nothing much happened. Then we get a bullish candle, and that is probably a continuation of the previous uptrend. So in this case, if you wanted to wait for a trend line to be broken through, you could have waited for a move through this one there, and then you could have gone long here, for example, with a stop loss below the last reaction low, the low of this ABC correction, and then it went higher again. And there was another one, a more convoluted one here. You can see we went down, back up again, down, but we didn't make a lower low. So what we need to see is a lower low, and that we did make here at the beginning of this year. So here basically you had the move down, up again, and then a move down again to a new low. At this point here, you could have thought, okay, this is potentially an ABC correction in the longer term uptrend, and therefore I'm interested in perhaps going long again in the direction of the overall trend if I get a bullish reversal. You got that on this bar here, and then you place your stop loss below that low of that A, B, C correction. If you want to wait for a trend line break, what you can do is just draw on a downtrend here, and then you would have had a trend line break here, for example, and a later entry signal. And then you had another one, can you see here, down, back up again, and down again. That low is marginally lower than this. And the distance of these moves, this move is very similar to that move. Again, that's a potential ABC correction. And then here on this bullish bar on the break higher, you could have gone long with the stop loss below this low. So these sort of patterns are not that easy to spot. It takes a bit of practice, but you can look at any chart and you will see them appear intraday or on daily charts, just as I showed you here on the S&P 500 chart. And they can be very powerful areas at the end of the ABC correction, potentially where you could re-enter in the direction of the overall trend. And they work in uptrends, as I just showed you, or also in downtrends. Hello and welcome to Technical Analysis for Pros. And today I'll be looking at the relative strength index and overbought and oversold conditions. And you can do the same for any other indicator which oscillates, such as stochastics or the MACD, the MACD, moving average convergence and divergence indicator, or other oscillators that you might be interested in. But here we'll cover the relative strength index, the RSI. And what I've done here on my chart is to draw on an overbought area which is above 70% and an oversold area which is below 30%. So basically the relative strength index oscillates between 0 and 100, and it is deemed to be overbought above 70 and oversold below 30. And you can see here when we fell on this NASDAQ 100 chart back in April of 2025, very sharply here, that fall, we were oversold. And then from there, we basically had this rally. Now, the problem is some people just say, oh, I want to buy when the market is oversold and I want to sell it when it's overbought. But that's quite risky because you can see here, had you done that, we became oversold around the 3rd of April. You might have bought the NASDAQ around 18,500, but in the next 2 days, it actually fell all the way down to 16,500. So a 2,000 point drop in 2 days, despite you being oversold. So basically what I'm saying here is that even if you're oversold, that is not in itself a reason to go against that trend and buy an asset. What you want to see is a reversal on your chart that is bullish, which changes the trend from bearish to bullish in this case here. And the same is the case for when you're overbought. Can you see here, the NASDAQ 100 started to become overbought above the 70% line here on the NASDAQ 100 around the, let's say, the 12th of May of 2025. You can see here we were overbought, we were above 70. And if you wanted to sell it here because it was overbought and you think the NASDAQ 100 would mean revert, well, you would have been wrong because you would have probably sold it around 20,750. As you can see here, the NASDAQ continued to rise and you stayed overbought for around a week or so. And basically it went all the way up to 21,500. So you could have lost quite a lot of money in that time period here where the market was overbought. So don't buy into an oversold market or sell into an overbought market simply because it is oversold or overbought, because this state of affairs can last far longer than you can hold your position if it is against the trend. And don't forget also, when markets are very overbought or oversold, it's actually telling you that they're very, very strong. The trends are very, very strong. So we can cover this in more detail when looking at divergence, at which case I would perhaps counter trade against the trend, but that's for another day. Hello and welcome to another episode of Technical Analysis for Pros. And today I'll be looking at negative and positive divergence on an oscillator. It could be the fast or slow stochastic, it could be the MACD or the MACD as some people call it, the moving average convergence divergence indicator, or my preferred oscillator, the relative strength index, the RSI. And what I've done here, I've looked at a Deutsche Börse stock, so it's a German stock, on the DAX 40. And at the bottom of my chart, I've got on this daily chart here, the relative strength index. And you can see here the RSI is overbought when it is red here above the 70% mark, and it's oversold when it's below the 30% horizontal line here. But what I'm interested in is if a market, or here in this case the Deutsche Börse share price, makes a new high. Can you see on the right hand side we've made a higher high which is higher than the high here seen in mid-March, and that higher high was made at the beginning of April. So we've got higher highs. But if you look at the oscillator at the bottom of the chart, the relative strength index, can you see the high that was made here? That high is lower than the high made in the middle of March. So that is not confirming a higher high on the chart. And when that happens, it's called negative divergence. And in most cases, probably more than 60% of the time, it does lead to at least a short-term correction against the trend, in this case, the uptrend, and sometimes to a major reversal. Now, normally what the oscillator does, it simply follows the price chart up. As you can see here, the Deutsche Börse price goes up. And here, for example, you can see we had a higher high there compared to a higher high here. And you can see on the oscillator, we also had a higher high down there compared to a previous higher high. But this time we have a lower high compared to the previous high, even though the share price made a higher high. And what happened then was this huge reversal within 2 days to the downside. And this lower high could have been an early warning signal to you to perhaps have a tighter take profit stop in case you were long the share, or to make sure that you have some sort of stop loss in place because suddenly you got a sharp reversal here. And this divergence could have forewarned you that this sort of scenario might happen. Now, obviously, it doesn't always happen, but it may happen. And it's just an interesting thing to know when you analyze your chart. So this was called negative divergence because the oscillator was not confirming the new high on the price chart. But we can also look at positive divergence on the same share here. And you can see, for example, in June of 2025, we made a low on the Deutsche Börse share price, and then we made a lower low, slightly lower on the 18th of June here. That low is below this low here. And if you go on your oscillator, the relative strength index, we can see here that we are now trading below the 30% horizontal line. So we are in oversold territory, but this low here, which corresponds to the lowest low, is above the low which was made on the 12th of June, which was a higher low. So we've got lower lows on the price chart, higher lows on the oscillator. This is called positive divergence, and it was forewarning us that we were likely going to see at least a short-term reversal against this downtrend here. And this is what happened. We basically bounced off for 4 or 5 days, and then, yes, the trend continued to the downside. But this bounce was basically happening after this positive divergence, which gave you an early warning sign that you could see at least a short-term correction against the prevailing trend occur here. So this is why I like to look at positive and negative divergence, because it quite often gives you an early warning sign of perhaps a minor or sometimes a major trend reversal taking place before it actually happens. And this can be quite useful information with regards to moving your stops closer to the market or your take profit stops, depending which side of the market you're on. Hello and welcome to Technical Analysis for Pros, where today I'll be looking at Fibonacci retracements and how to correctly draw these on your charts. So let's begin by having a look at this Vodafone share price, a daily chart and a candlestick chart. And what I can see here is a movement to the upside and potentially a retracement lower. And I want to know where that retracement lower may end in the future by drawing on Fibonacci retracements. So what I do is I go on here, do Fibonacci retracement from the lowest point of my chart to the highest point of my chart, and that then should give me possible areas where in the future the Vodafone share price might hold in case of it coming down. Now the problem with these extensions is that you don't know which of these is going to be hit. So usually what you have is 23.6%, 38.2%, 50%, that's actually not really a Fibonacci retracement, but that's still on there. And then the 61.8%. And then we have 76.4 or 78.6, depending on how you calculate it. But let's look at these horizontal lines and see whether they held a support or not for the Vodafone share price. And you can see here that the 23.6 was fallen through, but you can see that around the 38.2 Fibonacci retracement, we did hold in early June, and we held exactly around there on the 9th and on the 10th of June. And sometimes you have a little bit of movement through that Fibonacci level. It's not an exact science, but you could see here that you could say, okay, fine, we held for several days around this Fibonacci retracement support, and we also held above this previous low, and then we had a bullish candle here followed by another bullish candle, and that then meant that potentially we could be bouncing off that Fibonacci retracement level, and this is exactly what happened here. So these retracement levels sometimes are spot on, but most of the time it's the area around these, either 38.2, the 50% or the 61.8, that you should be looking at to see whether in this vicinity a reversal of the previous trend, in this case the downtrend here, the correction, is taking place, and you then resume the previous trend, which was an uptrend here for Vodafone. So this is why Fibonacci retracements can be very powerful, because once you hit one of those horizontal areas, these retracement levels, or come close to them, you then zoom in and focus on what the price chart is actually doing. You could look at shorter term timeframes and seeing whether you can see a reversal in the direction of the previous longer term timeframe trend taking place here or not. And that can be very powerful information with regards to your trading analysis and also your trading. So I use Fibonacci retracements as areas where I focus more on the price chart in the short term, and as an area where I might potentially find resistance or support depending on whether we are in an uptrend or in a downtrend.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest. And it's days like this, we get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Welcome back. Thank you, Axel, for that knowledge drop.
Absolutely. Always interesting listening to Axel.
So we've got about 4 minutes before we get the pain that is Palantir stabbing me in the heart. Scotty, we take us through what systematic trading and investing is.
So the simplest way to think of this is trend following.
Like your fashion.
So, absolutely. Look at me, still the finance bro or the wannabe finance bro with a gilet. But
Has that got Credit Suisse on it?
it is a Credit Suisse on. Yeah. One day this could be
You
worth.
can't see it.
One day this.
Go on, take it up to the camera.
There's
Scotty.
probably a reason for that. No, that's okay. I'm sure there's probably a reason for that. But yeah, one day this could be worth at least £4 or £5, I reckon.
Does it say risk manager on it?
Yeah, well, actually, yeah, I was hoping to get that head of risk management. That's all right. It's very, I think for credits, I think
Very
for
hard
good
to
reason,
see.
it's actually stitched in black. So yeah, it's good.
It's interesting, isn't it? A black gilet with a black Credit Suisse. It's almost like they knew there was a funeral coming.
Absolutely right. Yeah, that's why I like to wear it every day. Systematic. So everyone likes the phrase CTAs, the commodity trading advisors. That's because these trend following strategies actually started off in commodities, because years ago they still have the stronger, longer trends. But then that's now, So if you look on the chart there, we've now got a lot of measurements of how the positioning happens with these guys. Now, if you look, they do have to follow the market because they've got hard and fast rules. These are computer-driven strategies. They're not emotive. There's no discretionary aspect to it. So if you look at the far right-hand side of the graph, we'll just try and zoom it in a little bit more, and just zoom in a little bit for you as well, just to make it a bit more visible. So you'll see that sell-off that we had in Feb-March. So if you remember where we had the big sell-off in the market back in Feb-March, where that is, a lot of it is systematically driven and feels it.
Can we just zoom in more? So because I don't think people can see the extreme spike on the right-hand
I'll try
side.
to. I don't know what this is going to do to. There we go.
Yeah, there we go.
That. Yeah.
So if you see that does not stop at zero, that goes to the absolute top of the box.
Absolutely. And so if you look at the date there on the right-hand side, at the bottom on the right-hand side, 1st of Jan, so you can see the sell-off the market had. So CTAs are, or systematic funds are completely agnostic about price action, but it follows the price action and then amplifies it. So if you remember, the anecdotal evidence has been only retail funds bought throughout the dip.
Yeah.
So that's why the sell-offs feel like they're never going to end, because every automatic strategy is
having to puke,
selling and having to puke, and then you get that reversal. And then if you look at the positioning, and this is what we wanted to talk about, it's now above the height of the positioning, the peak of last year before we had the sell-off, the peaks through COVID. And this is what we're talking about, where systematics will just effectively leapfrog each other every day and buy and buy and buy, but discretionary money is still relatively underweight. So this is what some of the bulls are arguing about. There's still space to run in the market because systematics are here.
But equally, these systematic macro CTAs are in the 100th percentile of how long they are.
That's correct.
They have never been as long global equities as they are now, and then in US equities, they are in the 92nd percentile. If the market drops and the important level is 6,191, then these become sellers.
Yeah.
And the selling in global equities is $240 billion of stocks.
Yeah.
That's the kind of numbers that these things are playing in. That's why you see the market moving.
I mean, look, in the last 75 days, they've bought $375 billion worth. So these strategies are just agnostic around how much they sell. 365. Sorry about the format of this. I'm having to mess around with this on my laptop, which is not very professional. Oh crikey, what have I done now?
It's almost time now to ring that opening bell for.
It is.
So Palantir trading $168 last night. Are they going to be higher or lower? Are you going to see me cry on? I think 174 would get some tears. Cry live with IG. Let's see where it is. Yeah, 169. We can handle that within the expected move. Boom, 172. No. Once there's buyers say, I'm tempted. I want to short more, but I know, talking about CTAs, these will jump on this today.
Yep, 100%.
And it will take higher. So it could see 171, it could see 172, but that is where I am going to short more of this
instrument.
In fact, I'm going to put that in right now. So there we go. Selling 80. Oh, I need to get the... There we go. Order. Price level 171 spot 36. Good to cancel, to short, limit order. Boom, done. Right, that's in. How many hours until that's, or is it minutes?
Exactly.
Until that gets filled.
That's why it's called Trade Live with IG, because it is the ultimate buzz. So.
Yeah.
Buttons getting pushed as we speak.
Airbnb up 1.3, AMD up 1.1 ahead of numbers, so 178 there. Remember, the all-time high, 187. Intel catching a bit of a bid. That's nice to see.
Yeah, absolutely. Yeah, it's another one of those ones that should. It was only 6 weeks ago. It was forming a nice rebound, CEO change, but then that's just all fizzled out again. So that might be one. That is definitely one to keep an eye on. I mean, if they can turn that around.
Yeah, we're not going to find out for another 12 months of.
No. But again, that could be one of those ones you're looking back in 3 years' time, and yeah,
32 bid.
Yeah.
Nvidia up 35 basis point, 180. Walt Disney 119. Disney, remember, numbers tomorrow, along with Uber, along with the Big Macs, McDonald's reporting. And then on the downside, it's the boring ones, of course. Of course it is. Oh, I'll tell you what, had a crap day yesterday. Amazon. What was going on there? Stock opened up 1.5 and closed down 1.5 with the market rallying.
We actually were talking about that in the gallery where it is one of those companies, because it's a Mag 7 name, because of the size and the categorization, but it is it's so omnipotent now that once it starts spending money on future projects, which is over and above what people like, you can see the effects coming through in a couple of years. But this is one of those ones whereby, where do you reach saturation point for what they can do? And of course, there's more efficiencies. But in the tech names, they don't want efficiencies. The market doesn't want, here's some more efficiencies. They want margin expansion, future earnings, new projects.
And $120 billion of CapEx. That's what you got to do. You got to spend $120 billion on AI. And that's why the market takes you up to what is NVIDIA now? Well, 180 divided by 5. What's that?
Not quite upset. 3.8. 3.7.
So 40 times earnings. 180 divided by 5, 36. 36 times earnings, NVIDIA, on next year's earnings. Is it going to continue to see the same growth that it's seen? You know, so that's not this year's earnings, that's next year's earnings. Can we see EPS go above $5 to warrant that stock being on 36 times earnings?
I do still very much love the picks and shovels in the gold rush argument for NVIDIA.
Now talking of that.
Which is, I mean, again, I couldn't possibly rule it out, but...
It's certainly been early to the party, whereas others are now going to benefit more.
Yeah, well, and this is what's going to be interesting on AMD, right? This is the one that we were saying earlier on. If you can start to get a creep of market share, I mean, I think it's something like 3% market share of NVIDIA's market, and they talked about it might aim in the short to medium term to get to up to 10% and then to 20%. And so you can talk about, you can see the scale of opportunity without a doubt.
Yeah. Strategy having a good day. We haven't checked our good friend at SWC. What is he doing today? Nothing really. 210, 225. Bit of a nothing done. Smarter Web raising, now Andrew McKelvey told us about this, 8 million sterling yesterday.
Okay.
That's on top of him selling stock every day. So yeah, it's gone from kind of, you know, the big headlines with the £40 million raises to just chipping away every day.
Yeah, I mean, look at that. Actually, for a company who's making a kind of major transition in itself, that's actually reassuringly quiet price action for the last couple of weeks, isn't it?
Yeah.
It's actually reassuringly dull,
there.
which just actually shows that it's in that sort of a period where, okay, people are understanding it now. You've got a bit of equilibrium. So you've had the rush up initially, and then the rattle out, and now you've got that equilibrium, easy for me to say. You've got that equilibrium now, which I think is actually really encouraging for a company like that.
Yeah, you're seeing that 3 to 4 times MNAV is about right. But remembering that the NNAV increases every time he does an equity raise. So, you know, in theory, this, if everything stays equal, then it goes £2.20, £2.30, £2.40, £2.50 over a number of months. So you're not getting the 100% gains that you were before.
No, that's right.
Perhaps you, you know, you do see that accretion of
it's what you want. I mean, if he's in
the NAV.
He's slowly evolving the company like that, that's the kind of price action that you want. You don't want from the £2 up to £3 to £2.50 to £4.
It's good to trade.
It's amazing to trade. I'm sure some people have had an amazing summer trading that. But at the same token, if you're talking about actually changing a company and appreciating it, then that's the kind of price action that you want initially.
Right. Were there any? It's 9:07, so we got a few minutes, Scotty. What other? Yes, it was the gold miners. That was it. So in my portfolio, I have at the moment the VanEck Gold Miners ETF. I thought this was a really interesting chart for what that's done and where it is. Look at that. To me, that looks like a potential for a breakout.
Well, it's really trying to break out. Yeah, look, I mean, you've had the tester. You've had three testers there. Those wicks on the candles at the top line, right where you're hovering, and now you get a close above that, and then all of a sudden again, this is where nowadays with the electronification of markets, 80% plus of all equities trades nowadays are done algorithmically. So we might, hate that stat, but again, what it means is that price action is out in the open. So when you're seeing a break above, and those closing candles, they can be significant, where a lot of these machines would just go, right, that's confirmation. Yeah, let's go.
So it's got the chart. I like gold. I think gold has got great fundamentals just now with those job numbers.
Yeah, absolutely.
Yeah.
Especially with seasonality alone, August and September traditionally are choppy seasonal months. They're not huge negative swings, but they're definitely choppy. So yeah, you could see a little breakout of that and gold back to highs without a doubt.
Yeah. Good. Right. Funky Gibbon asking, what's up with YouGov? What is happening? I never really understand this business, to be honest. Up 23%. That's what's up with YouGov. Wow.
Is that the polling company?
Yeah.
Ah, okay.
There we go. Performance to be in line with expectations. Concerns were that it was not. Expects client budgets will continue to face some pressure. But yeah, full year trading update looking good. But the stock had been hit a couple of months ago going into... Oh, sorry.
As that survey says yes for YouGov this morning.
Yeah, it's funny. There's a lot of these companies around, isn't it? YouGov, like Trainline, these second tier ones that you could really get your teeth stuck into.
Absolutely incredible.
Good.
Right. Let's flick to Polymarket. Let's just see in.
Go on, yeah. Give us the Polymarket update, Scotty.
Coming in, let's see what's happening. Let's see what's trending on Polymarket. Oh goodness me, even that's quite dull today. Fed decision in September. So yeah, that's probably swung back. I think we've got as low as like 60% for a cut in September. Now we're back to 76.
What will Trump say during the 1 p.m. interview this afternoon? I like that. I'd have a bit of that.
It's just million, billion, trillion, 15 plus.
Oh, this is a great game. Come on, how do we get involved in this?
Goodness
Right, what
me.
is he's?
I mean, Sydney's really 19%. I mean,
Well, because this happened yesterday because he was told yesterday she was a registered Republican.
oh yes, of course, that's right. I mean,
So he says, well, then it's a great advert.
yeah, of course. Yeah. Greatest advert ever. Greatest advert ever.
Brazil, yeah. What's a low? Is there any more further down the
Let's
list?
have a little look, see if we can
yeah.
scroll down a bit. No, that looks like that's the extent of the 19% Sydney Sweeney. I think even Sydney, I mean,
Yeah, that's an outsider. 20 is probably the right price. Tariff. That's
Tariff. Love the
there
tariffs.
you go. He said it 3 times there.
yeah, I like million, billion, trillion, 15 plus times. I think he's going to be throwing data at the presenters. I mean, imagine imagine us sitting here as we are now. Imagine if you got Trump in the middle on a live TV show. You're just thinking it must be like a roller coaster ride. Whoever the Phil is at CNBC must be dreading the next few hours.
They went for Elizabeth Warren yesterday. She was on yesterday,
really?
and they really went for her.
Did they really?
Yeah, because she's a big fan of the new York mayor, who's a 43-year-old socialist, younger.
Yeah.
And yeah, that was.
Although that I actually did see overnight that this new mayor of New York is now, as they say, becoming accustomed to the pressures of the big office in the corner, because he suddenly swung around saying he wants more funding for police, more law and order. So this is like a lot of these things. You're outspoken to get you into the big office, but then when you're in the big office, you realise that the reality is very different.
Kirky makes a great point. So, Eric Trump has just put $4 million on him to say Sydney Sweeney in the poly market. Oh.
There we go. Exactly. And for Kirky as well, don't tell Trump about this poll, he'll fix it.
Yeah, exactly.
Yeah.
Or he'll sack the person who designed it.
Yeah, that could be very exactly. If you ask the wrong question on CNBC, you could give it the old "you're fired."
Jobs would be. What would be your outside word that you think he would mention? China. It's going to be obvious.
Yeah, I would imagine he mentioned China. It'd be interesting if he mentions. I mean, I don't know how outside it is, but I mean, India's back in the crosshairs.
Yeah.
So it will certainly mention India. I didn't see
Putin.
that. Putin.
Right, let's give us your suggestion of what's the most unlikely words you can think of that Trump will say on CNBC this afternoon, but he will actually say it.
Sorry.
That's a good one.
That's probably.
I'll make you a market of 3-4 on that.
Yeah, exactly right. Yeah, Kirky, fake news. Yeah, absolutely right.
News. Yeah, what's the most? No, Scotland. I'll go Scotland.
Yeah, true. Yeah, you had a good time there. Lovely people.
My mother was born in Scotland.
Yeah, he's not sure about that fellow with the glasses he met, but
Yeah.
there you go. Anyway.
Here we go. To play us out, we've got.
I mean, for such a musical show today, if that's not worth a like and subscribe, then I do not know what.
Right, as we go into our wonderful new podcast, The Art of Investing, that's us for today. Oh, come on. Keep it going.
Yeah, Rich was getting patriotic then.
Yeah. Freedom. Or is it more the train spotting?
Could be, yeah. I still like the freedom. I think on next time it's St Andrew's Day, you should have the old face paint from Braveheart and.
I can't do the train spots. I know the train spotting speech, but I can't do it because it's got too many expletives in it.
Absolutely right. Yes, absolutely right.
I don't hate the English. They're just.
Yes, exactly.
We, however, were colonised by Right, let's go into it then. Art of Investing, thank you very much for joining us on this beautiful day. Get out, get some sunshine after you listen to the podcast. And yeah, go do your research at what companies get into the FTSE in 6 weeks' time.
Absolutely.
Bog Standard Bond has three attributes. It's got an issuer, an interest rate, and a payback date. Now I want to come back as the bond market, because you can intimidate everybody.
And even the FTSE 100 has made a new high.
Cut taxes, I don't care about what borrowing's doing. The bond market said, we don't like this. I'm wondering whether we are now reaching the stage where it pays to take a few chips off the table. What else is there for the bulls to play with?
Netflix, which we all know and love, were expected to do very well because of Squid Games. They did. They had great results. But the shares actually managed to fall about 5% on the back of it.
Just if we do need to clarify to Chris, so Netflix is this great online thing where you can watch movies without loading a DVD in. Your capital is at risk. The value of your shares, ETFs and ETCs can fall as well as rise, which could mean getting back less than you originally put in. This content is for information purposes only and is not investment advice. Past performance is not an indication of future results. Welcome to episode 3 of The Art of Investing, the Bond Special, brought to you by IG, the global investing platform. My name is Rich McDonald, and I'm joined today by Chris CJ Fellingham and Mark Spice Holden. Today, we're bringing you all you need to know about bonds, and I can't wait for this one. Before we get into that, we're going to take a look at what's been happening in the markets this week. Spice, what is driving us higher?
Well, hi, everyone. Well, as a natural optimist, being an equity investor compared to the bonds, as you'll hear, they're natural pessimists. It's been a really exciting week in markets again. We've made new all-time highs in the S&P 500, NASDAQ, and even the FTSE 100 has made a new high, which is a rarity, I know, but it's pushing up to new highs along with copper. And that's one of the things that's helping the FTSE, because the FTSE has a lot of mining companies in it that make a lot of copper, and they're natural beneficiaries of that. The rest of the markets around the world have lagged a little, although they were given a boost, particularly in Japan and Asia. Japan have managed to eke out a deal from Trump, of 15% tariffs, which is better than the people were expecting.
After 8 trips by the Japanese to Washington.
It shows face-to-face negotiations are better because the Europeans still haven't got there. But the Japanese stock market, the main stock market in Japan, the Nikkei, rose 5% on the back of it. It's very, very close, within a whisker, 0.5% of its all-time high. And Europe were given a little boost themselves because the FT ran with the story that they are about to do a similar deal with Trump on the tariff side.
I thought it was particularly interesting that the autos got carved out. They got saved. So I think Nissan was up 7%. And of course, then there was the read-through to the German autos as well. Maybe they'll be part of the trade deal and not get quite as big tariffs. So they were up 6% yesterday.
Absolutely. Helped the DAX have a nearly 2% day, which again is very good, taking them again within about 0.5% of the new all-time high in Europe. Other European sort of countries not doing as well, but, DAX, the Germans are leading it, which is good to see. So all that is very positive in the background. We're just waiting now to see whether South Korea can sort of come out with a deal. There are lots of other countries involved trying to do deals, but the ones that are important for markets, we've just had the big ones, which is Japan. And as long as Europe get that over the line, that will be important for overall sentiment. We're also in the middle of the second quarter reporting season. You pick up the paper, you look at the news channels, and you'll see that there's a whole wave of companies coming through. We talked last week about beating expectations and expectations management from markets. And Netflix, which we all know and love, were expected to do very well. So the expectations were high because of Squid Games. The last part of Squid Games was coming through. And they did. They had great results, better than expected. But the shares actually managed to fall about 5% on the back of it because expectations were just got a little bit ahead of themselves. General Motors, on the other side, were one of the first companies to quantify how much the tariffs are going to cost. And they're estimating that's going to cost them as a company $1.1 billion next year, which is a huge amount of money. The shares fell 3% as a result. But at least they had a go at telling the markets what they thought would happen.
Just if we do need to clarify to Chris, so Netflix is this great online thing where you can watch movies without loading a DVD in.
Even I have started to use Netflix. A bit of a Luddite, I certainly am, but Netflix is there. Amazon Prime as well, I've heard of and am using, but I've gone about as far as I can.
One thing you will remember, though, is Nokia. Do you remember those?
Oh, I love my Nokia phone. My Nokia phone was fantastic. It's like having a brick in my pocket.
Exactly. Well, the old brick company, Nokia, which interestingly came out of tire making, if I seem to remember rightly, basically, back in the year 2000, was the biggest company in Europe. And, they've gone from bad to worse. And the shares have now fallen 87% in the last 25 years. Having been Europe's biggest company, it's now a company we don't even bother about. But they had a profit warning, just another one. They've had loads over the last 25 years. The shares fell 15%. So very bad expectation management on their part. So talking about the companies in the Magnificent Seven, and Netflix is just outside of that. If you remember the Magnificent Seven, sometimes called the Mamatams, which is basically Microsoft, Apple, Meta, Alphabet, which is Google, of course, to most of us, Tesla, Amazon, and NVIDIA. Those are the Magnificent Seven. And yesterday, so for your listeners, that was on Wednesday, Tesla had results. Again, didn't live up to expectations. They were expected to be poor, but they were even worse than expected. And Elon Musk didn't do a great deal to support the share price. The shares fell 6%. And on the other side, Alphabet, or Google, as we all know it as, actually had great results. And the shares have risen 3.5%. And that was despite them saying they're going to significantly add to their AI investment. And that's really important because that then helped all the other AI companies like NVIDIA, the world's biggest company. NVIDIA are up about 1% today as we talk. But Google shares, Alphabet shares went up 3.5% as a result. So a good start to the Magnificent Seven reporting season. Next week, we get another 4 of them, all the rest except for NVIDIA, and NVIDIA report at the end of August. So they're really important because if you look at the underlying earnings expectations within the S&P 500 for this quarter, well, the Magnificent Seven are expected to deliver about 14% earnings growth, and the rest of the market underlying is expected to do only about 3%. So it's really important for the overall market that these companies deliver. And so far, one of the 7 has delivered well, and one of the 7 has delivered badly.
And we check them off one by one. And is that part of your famous wall of worry that we've been climbing, Chris?
People have always and will always worry about the numbers that are coming through. But as we talked about, as Mark's mentioned already, we covered it pretty well last week, the companies generally are pretty good at massaging the expectations to where they can still beat them. I'm never surprised when a US equity comes in and beats numbers, because that's why they trade on 29 times historic earnings. If they don't hit it, they've got real problems. Over the last few weeks, we've made it pretty clear, I think, opposed to one member of this team who was brandishing yellow cards last week for us being bullish. We made it pretty clear that bull markets climb a wall of worry. And I personally am of the view that we are now getting to that stage where I'm worrying about where the bad news is, because at the moment, everything that I was worrying about is now out in the open. The thing that I was really thinking about, which the wall of worry was going to climb, was the tariff announcements.
Yeah.
And for them to come out and say, Japan's got a deal, and then to come out and say, and Europe's probably got a deal as well, and the market to not say, oh, I don't know whether it has or it hasn't, but to price in immediately it has got a deal, I'm wondering, what else is there for the bulls to play with? Now, clearly the earnings are good. That's great, and that's superb. But as a sort of macro investor, as a bigger picture investor, I'm sort of wondering whether we are now reaching the stage where it pays to take a few chips off the table. And one of the things we'll be discussing over the next couple of weeks when we look at our portfolio construction is, what should our equity weighting be? And there's going to be quite a big debate, because I'm giving you one side. I'm sure Mark will be giving us the other side, and we'll have to somehow work out between us how we're going to put that together, with your input clearly, Rich, from a clearly negative person to start with.
Negative person. Cautious, let's go with. But I can see where that argument has come from, CJ. And hands up, I will yellow card myself with my my bearishness. However, what are you now feeling at this point? What would you be doing?
I've been fully invested in equities. I've actually had a lot of equities and basically nothing else, as Mark knows. And I've started selling my UK equities today. I've sold out most of my US equities already because into Europe and other things. So I don't like the dollar. Nothing to do with the US equity market. US equities are fine. I just don't like the dollar. Where I've got big overweight positions in the UK and in Europe, I've started to lighten the load because I think we've got to the stage where all the good news is priced in.
Is he too early, Mark?
Well, I might disagree, and we haven't really got time to discuss that here because there are lots of good reasons. We will cover it in the future. But all I'll say is, remember, a profit is never a profit until it's sold. Basically, if you've made a profit, bank it. That's a profit. If you don't do it, it's never a profit.
Perfect. Right. Well, that gives you the perfect example of the kind of debates that are be going on in the coming weeks. Because remember, the difference with this podcast is that the guys are going to be launching a model portfolio. Along with IG, you're going to have a live portfolio running, and there's going to be live debates like we've just got a snapshot of as the weeks go by, which I am very intrigued to hear, knowing that now you're almost at odds.
We're becoming on the other each side of the debate.
On equities,
Bring
especially.
it on.
However, today, of course, is all about bonds, also known as fixed income. Professor Bond, lead us into our lecture.
To start with, when we talk about fixed income, some people might call it fixed interest, or you'll hear the name bonds. It's all the same thing. So first thing is don't get confused by the terminology. They're all bonds, and that's what we shall call them in today's little briefing. They're extremely important in the financial markets because they tell you at what rate governments and companies can borrow money, what the key interest rates are in the marketplace.
And I guess it feeds through to mortgages as well.
They feed through to mortgages, they feed through to valuation of equities, what's the risk-free rate, and dividend growth rates on top, all these sorts of things. They are fundamental to how the markets are all valued. Bond markets do well when everyone else is suffering, and bond markets do badly when everyone else is doing well. And you'll see that when we get through and talk about some of these things. So I'm naturally always looking for slowing economies, low inflation, deflation. I'm looking for the pain because I know that's when bonds will do well.
From Finance 101, we're always looking for things that behave in different ways, aren't we? Because then the correlation in portfolios, i.e. how not to lose money, how to reduce your risk overall, that really helps when things perform better at different times.
You're getting really into the weeds of portfolio construction when you mention things like diversification. Because as you say, a perfectly formed portfolio will have a number of assets in it which move in different ways and therefore provide some diversification if something goes wrong in what you think is going to happen. We'll be talking more about that when we come to the portfolio. Let's stick with what we're talking about here on bonds first, but they are diversifier away from equities, and so they need to be considered, and we need to think about them. They're somewhat complicated, but don't let that put people off. They have the power to destroy the best laid plans. Look at Liz Truss and Donald Trump, a pair you would never normally put together. But Liz Truss ignored the bond market. She came in, the mini budget, cut taxes, I don't care about what borrowing's doing. The bond market said, we don't like this, sold off. Chancellor had to go, and then Liz Truss had to go. And then, of course, with Donald comes along with his super tariffs. Everyone's going to pay me lots of money, and China's going to pay me 20, 40, 60, 100, 150%. Bond market starts selling off. Bond yields are going up. It's going to cost the US government to have to borrow at these levels. Suddenly, it's all sweetness and light. And now it's much more realistic and much nicer. So both times the bond market had big influences. And there's a very famous quote. And so here's the first thing for everybody to remember, the famous quote from a strategist of Bill Clinton, a chap called James Carville, who said, I used to think if there was reincarnation, I wanted to come back as the president or as a 0.4 baseball hitter. Now, for those who don't understand baseball, just a quick side, 0.4 means they hit the ball 4 times out of 10. So if you do that, you're genuinely a really good baseball player. Don't know anything about it. Please don't send any comments to me. So he said, I want to come back as a president or as a 0.4 baseball hitter, but now I want to come back as the bond market because you can intimidate everybody. That is what happens at those extremes. The bond market intimidates. Okay, so let's talk about bonds themselves. They come in all shapes and sizes. We have asset-backed bonds. We have index-linked bonds. We have infrastructure bonds. We have zero coupon bonds. We have so many bonds that it gets confusing even for me. So we're not going to go anywhere near that. We're going to think of a bog standard bond. And bog standard bond has 3 attributes. It's got an issuer, an interest rate, and a payback date. The issuer can be a government or a corporate entity. It could be IG. It could be the Japanese government. The interest rate is the amount the issuer will pay you each year. So each year, you give them some money, they give you some money back. That's the interest rate they pay you. Payback date, or what's not known really is as the redemption date, is when the issuer agrees to give you the face value back of your bond. So 3 bits: issuer, interest rate, payback date. Let's take an example close to Rich's heart.
No, I can't wait to hear what this is.
The Thames Water 6 3/4 2030 bond. Do you want to just give a 30 seconds as to why you know this bond?
Oh, I'll keep it to 3 seconds. It cost me money.
Because it went down in value and you sold it? What happened?
It was one of my ideas about diversifying my portfolio away from equities, and in a list of 10 corporate bonds that I held, including Heathrow Airport, John Lewis, Thames Water was one of them.
So if we take that example of Thames Water, 6 3/4 2030.
It's underwater.
Thames Water, thank you. Thames Water is the issuer, 6 3/4% is the interest rate, and 2030 is the redemption date.
And I get the interest rate every year.
Every year you get the interest rate. So think of a bond as an IOU, essentially.
Is this where the term "my word is my bond" comes from?
No, the word is my bond was the old city saying for if I tell you I'm going to do something, I'm going to do it. If I said I was going to buy it here, I'll buy it. If I said I was going to sell it here, I'll sell it. And you could not break that. In the city of old, there was nothing worse than breaking a commitment like that. One other thing that's important with a company bond, with a corporate bond, is it comes before equity in the capital structure of the company. So if the company goes bust and they're sharing out the assets of the company, the first dibsies go to the bondholders.
Is not the inland revenue.
The inland revenue sits there as well, but we don't want to overly complicate things. The bond guys come before the equity guys.
So you'll get paid before Spice does.
Correct. Now.
Same old, same old.
Yep. Yeah. Now, the interesting thing there is that the bond is therefore thought of as more low risk than equity because you're slightly better off in the capital structure, but you can't get any more capital gain on your bond than getting back 100 at the end of the day, getting back the face value of your bond.
So the maximum I can receive in return is how much I lent you and the interest rate per year.
And so you're capped as to how much you can get. But you are actually taking a lot of that equity risk, which is why, as Mark knows, over my career, I have brought about this expression. I cruelly like to think of corporate bonds as equity without the upside. So I'm taking the equity risk, but I've got no upside from it because I'm just getting a fixed yield. So if I'm happy with the equity and they're not massively overvalued, why wouldn't I buy the equity? So in my personal portfolios, there is very little exposed to corporate bonds. That's a particular part of the bond market.
Okay, so what can we take away from that X-way? What's the really important couple of things to take away from that?
First things to take away are who's issued the bond. So when you see a bond, wherever it is, lying around on the floor, in the FT, wherever, who's issued it? What coupon are they paying? When's it going to be redeemed? That's what you need to understand about a bond. You've understood where it is in the capital structure because we've just talked about that. And then the final point I want to make before we go to the 2 key rules that we need to learn and understand about bonds is the price a bond trades at reflects what the current interest rate is in the country or in the economy, where people think that's heading. So whether you go back to Mark's talk about expectations on equities, this is the expectations on where interest rates will be going. And it will also reflect the credit risk of the issuer. Because if I have a bond that's 30 years to redemption and it's in, I don't know, Marks and Spencer's, or if I have it 30 years to redemption in the UK Treasury, I'm going to think the UK Treasury is a far better credit risk than Marks and Spencer's. Now, we can debate that by all means, but the government has the power to tax. The first thing to understand about bonds is when prices rise, yields fall. When prices fall, yields rise. Now, I'm going to give you a little example of how that works. Let's assume base rates are at 10% and I have a bond which yields 10%. Okay, happy with either? That's great.
Okay, so bond 10%, interest rates 10%.
Correct. If interest rates fall to 5%, then people are going to look at my 10% yielding bond and say, gosh, that's valuable. I'd like to buy some of those. The price, therefore, goes up as the demand for that bond increases.
Because you'll get 10% back per year with this thing.
Yep.
And you now only get 5% with this.
Correct. So prices will rise because yields will fall. Because by definition, that 10%, it will still be valued at 9%, will still be valuable at 8%, will still be valued at 7%. So the price will go up until it gets to a price where people are not caring which one they buy. So prices go up as yields fall.
The way I got my head round this back in the good old Credit Suisse graduate scheme, which was across in New York. We got flown out to New York for 10 weeks. But I sat there and I tried to understand, but not until the teacher said it's like a seesaw. Imagine a seesaw where you've got coupons, yields, interest rates on one end, and the price of the bond on the other. And they go up and they go down.
Yeah.
So as the yield goes higher, the price goes lower. And as the yields go lower, the price goes higher.
Sometimes it's not as intuitive as people think and talk about these things. But if people are talking about prices going up, yields are falling. And if prices are going down, yields are rising. Get that, everybody get that into your minds. Because when we talk about our portfolio, we'll talk about where we think interest rates are going, where we think yields are going to go, and that will then dictate whether we think prices are going up or prices are going down.
And by the way, the principle is exactly the same in equities. So, if the yield goes up, the price has effectively gone down.
I think the second important thing to understand about bonds is that shorter dated bonds, and I'm going to say, when I define short-dated bonds, I'm going to say less than 5 years to maturity. So something with 1 year to maturity, 2 years, 3 year, 4 year, 5 maturity, they are dominated, where they trade is dominated by where you think interest rates are going to go. So if you think interest rates are going to go down for 1 year and up for the next year and down for 1 year, that will affect that short-dated bond quite a lot, because buying that short-dated bond, a 3-year bond or a 4-year bond, it's so close to today, you can sort of imagine where you think interest rates are going to be. So you can have a really good, very good, accurate thought of whether that's value or not.
So if I just need to borrow money for 2 years, I'm considered a short-dated bond.
If you're borrowing it and you issued the Rich McDonald 2-year bonds, that would be a short bond. I also don't think it would be very creditworthy, but that's another subject. So then, longer-dated bonds are those with 20 to 30 years to go to maturity. So they're long time out. You've got to you've got to think really hard about what the value of a 20 to 30 year bond should be, because they're dominated not just by the outlook for interest rates in the short term, where interest is going up or down. They're dominated by supply and demand, the budget deficits of countries, how much is being issued, and also the creditworthiness of the borrower. I can perfectly sit here and say, let's pick John Lewis, as you mentioned it already. For 2 years, I think John Lewis is a good credit. How do I know they are in 10 years? How do I know they are in 20 years? How do I know they are in 30 years? And my uncertainty gets worse as I get longer. So I want a high yield. And the point I'm trying to make here is that because there are so many other things which are influencing the longer dated bonds, they will yield more. If there's more risk, you just expect better return. They will yield more than short dated bonds. And you get, therefore, what's known in trade as a yield curve.
I'd like to take a moment to make you aware of an awesome offer IG is currently running. Until the 15th of August, IG is giving away a free UK share bundle to all new customers worth up to £100 when you invest just £20. Sign up for a general investment account, a stocks and shares ISA, or a SIP and make your £20 investment to get started. Your capital is at risk. The value of your shares, ETFs, and ETCs can fall as well as rise, which could mean getting back less than you put in. New customers only. Offer is valid until the 15th of August for ISA, GIA, and SIP accounts. Other fees may apply, and T&Cs apply. So I guess the further you go out in time, the less you can predict things. If I've got 2-year goals, I'm pretty sure what those 2-year goals will be. 20-year goals, who knows?
Isn't it also fair to say that the central banks can control the short end much more than they can control the long end? So when markets get really scared, it tends to be the long end that has the biggest moves and has a big impact on things like equities, etc. Because the central banks could say, we're going to hold our nerve for the next 2 years, and markets sort of have to believe them. But they have no credibility when it comes to looking out 20 or 30 years.
I kind of feel we almost need a visual representation here of what this yield curve is, or the difference between a long end and a short term.
I think that would be a useful experiment, and we're going to try, therefore, for those of you who are watching on YouTube, a visual example of what we're talking about. On your left-hand side, as you look, is the short-dated bond, and that's Rich.
That's me.
So Rich, let's say Rich is a 2-year bond, and he's quite low.
Right, well, I'll get low.
And then on your right-hand side, you see someone who looks like a surfer, which is Mark, and Mark is the long-dated bond. So Mark is a 30-year bond. He's higher in yield, so lower in price, whereas Rich is lower in yield, and what they're holding between them is a yield curve of all the bonds in intervening maturities.
So 2, 5, 10, 20.
30 or longer.
There we go, guys. And if you enjoyed that, I don't really know what to say.
That's a surfing position I haven't used for about 40 years.
So what factors would you expect to affect longer dated bond prices? Because I think this is critical, and we'll have an example in a minute. Most important factor is, will you get your money back? If we take that example of Thames Water 6 3/4 2030 bond, they were issued at 100. They now priced at 68. They yield 16.75%. Given that is only a 5-year bond and it yields over 16% against interest rates around about 4 at the moment, you can tell there's a lot of doubt whether you're ever actually going to get any money back. There's a perfect example of the market doubting you'll get a return of capital. Other factors, though, are inflation. High inflation means higher interest rates. Higher interest rates mean higher yields. Higher yields mean lower prices. So when we get inflation and we start to think inflation is a bit of a problem, don't go anywhere in the bond market. It's not going to be a good place to be.
So as the government tries to slow down the economy and take the heat out of it, then what would I expect that to do to bond prices?
When the market starts to see success, that it can now start to look forward to a time of lower interest rates, then the bond market will start to rally. But that's only a long way into that process, because you've got to get on top of the economy. You've got to slow it down. You've got to make inflation behave. And as we all know, we used to have an old expression, the economy is like a supertanker. Once you get it started, it's tough to stop. Once it's stopped, it's tough to get started. And so once it's going, you've got to put interest rates up probably much higher than you think you will have to get in charge of inflation. So I can see that I'm about to get a yellow card from Rich. So we'll move on. Growth is another thing that influences bond prices. If growth is slowing, it means interest rates might be cut. If interest rates might be cut, yields will come down. If yields come down, prices go up. Supply and demand influences things, because the more supply, the lower the price, the higher yield. Okay, so all these things are there. And I'm going to give a quick example just to show how that all works. And the one I'm going to choose is the Liz Truss example that we talked about earlier. Government bonds are used to finance the gap between what the government gets in through taxes and what it spends on the other side. That number could be a small number. When Gordon Brown and Tony Blair was in, that actually went to surplus, but we haven't had a surplus since then.
Oh, those were the days.
And the budget gap at that stage of Liz Truss was £133 billion, which is 133 with 9 zeros behind it. The Chancellor cut income tax, corporation tax, national insurance, spent on heating cost subsidies, and had no care about budget increasing and didn't talk about any sort of way they were going to control spending or do any of that sort of stuff. They talked about they would do it. There was no evidence of it.
So their income was dropping.
So the income was falling, and what they're spending on wasn't showing any sign of falling. After the budget deficit was 177 billion, which was an increase of 44 billion just in that mini budget. And the worst news was the Chancellor that weekend, Kwasi Kwarteng, said in an interview on Laura Kuenssberg, we've only just started. We've got lots more ideas for tax cuts, lots more of these things to go.
So I'm guessing the market started worrying about the ability for the government to...
Well, come Monday morning, all anybody could see was it was raining gilts, and so lots of supply, worries about what's this going to do to the economy. Is it going to be inflationary? Are we going to have to tighten rates because growth's going to pick up with all these taxes being cut? Well, market sold off massively. Essentially, it forced the market not to work properly. The Bank of England had to come in. The Bank of England had to offer a facility to buy anybody's gilts if they wanted to sell them. That was the end of the Chancellor, and that was the end of Liz Truss.
So in summary, they almost ticked every single box that is bad for a long-dated bond.
Yeah, and we're not here to get in the politics of it, because I think we'll all have views on it, and we can talk about that another day. It was done badly. It was exactly what the market didn't need without any preparation. And the gilt market said, you know what? If you're going to borrow this much money, we're going to put yields up a huge amount, so it's going to cost you a lot of money, which means gilt portfolios collapsed in prices.
So to go back to my seesaw example, prices down, interest rates up, everybody's mortgage is up, and there was just panic, wasn't there?
Yeah. Bonds are a vital part of the financial machinery. They're less risky than equities, but they don't have the capacity to return as much. They're really useful to understand where the city thinks interest rates are going to in the future, and they will move well ahead of what the financial press is telling you will happen. Watch the bond market first. It will tell you what's going on, right? It's got a great ability to see what's going on before any economic commentator will tell you anything.
Right.
Before your Goldman Sachs's or your JP Morgans come out, they all follow the bond market. The bond market leads. And so watch the bond market. It's a real canary in the coal mine.
And by the way, equity investors watch the bond market just as much as other people do as well, because when you get sudden changes, equity guys aren't worried about it. But when you get sudden big changes like you had with the Liz Truss budget, then equity markets sold off as well. Everything sold off. The pound went down. International investors said, we don't want to invest in the UK. Whoa, we don't know what's going on there. We don't trust them to give our money back.
God, this is all excellent stuff. And it feeds into the portfolio debate so well, because now I love equities. I always have. But I've become even more interested in bonds now that we've talked through. And I'm really happy that there's another option to put
a convert to the fixed income side.
There's one. There is one.
Yeah.
So this takes us perfectly into today's question. And an email that we got from a viewer of last week's podcast said, right, you've talked about launching this model portfolio, and it's going to have equities, it's going to have bonds in it. How are you going to decide what goes into it? What's the allocation going to look like? And how do you decide what instruments to use, for example?
First, let me give you a little bit about the timing of it. I feel very strongly, I know Mark agrees with me, that if we're going to go through a process of talking to people about what's in our portfolio, how it's going to change over time, how it's going to react to various things, we need to explain to people what the building blocks are. And these episodes, last one on equities, this one on bonds, next week it'll be on commodities, bit of gold, bit of Bitcoin, those sorts of things, are there to build those building blocks for people to see how these things move. So when we talk in the podcast afterwards, so not next week, the week after, we will be unveiling our portfolio and explaining why we've come to the decisions we've done. We'll talk about some of what, some of the debate that's happened, and we probably have some debate in there as well, but it will makes much more sense to people if we do that in that way.
But the exciting thing coming next week is a list of some of the instruments that you guys will be looking at, ones that you've used throughout your career, that you know that the funds that you've both worked with use, and we'll be showing those on screen for everybody to get a kind of taster of, right, how do I get access to these equities? How do I get access to the bonds? And you mentioned we're going to be talking about commodities, gold, even Bitcoin as well. So that's coming next week, and that's exciting to see what it's going to look like. But yeah, how are you going to decide on what to get in there?
I think one thing to say is we're not going to own direct equities because there's too much risk in just owning one stock. For example, if Elon Musk gets run over, the Tesla share price would sort of halve probably. And if you've got 10% of your portfolio in that, you're down a huge amount. You're down 5% in a day. So we're not going to do that. It's a way of investing. You could invest, but we're not going to do that. So we're going to be not single stocks, but we'll buy things like ETFs, exchange traded funds, which give you an exposure to an overall stock market like the S&P 500 or the FTSE 100, and exchange traded commodities as well, so that they basically gives you an exposure to lots of commodities as well without owning a block of gold, which obviously not everyone can go out and buy a block of gold. You can buy unit trusts or mutual funds, as they're called in America, where basically we could, you pay within that structure another manager to do the job, trying to track or beat a stock market or beat a different index, what you want them to do.
Oh, we don't need those.
We don't need best managers. Exactly. And there are things like investment trusts. And ironically, those last two things, investment trusts and mutual funds, retail funds, are very expensive and not what we want to give you, the potential followers of this portfolio. Because in things like exchange traded funds, it's very, very competitive. So prices are tiny, anything from like 0.07% or 0.05% up to maybe 0.25%. Whereas you might pay a manager of a fund sort of anything up to 1.5%. And we don't want to do that because 9 times out of 10, I hate to say it, and having been one myself, they don't do what they're meant to do.
This week's yellow card is not for what you're saying, but I cannot believe how much you've been getting paid for the last 40 years as fund managers.
Been a hand-to-mouth existence, Rich. That's why I'm here, looking as impoverished as I do.
Well, talking of which, I do have a flight to catch, gents. I am off to Ibiza. Straight from the podcast. So I think we're going to have to round up this week's. Otherwise, you don't want me missing my flight. It's been wonderful. And if you have enjoyed this week's episode, then remember there's a new episode every Friday. So make sure you hit that subscribe button. And what else should the viewers and listeners do?
Email in to the art of investing at IG.com. Any questions, observations, anything you like. We're ready and willing to answer most things.
And if you like it and tell other friends and people about it, that would be great too.
Thank you so much, everybody. And thank you for joining us again on The Art of Investing, brought to you by IG, the global investment platform, FTSE 250 listed, and has been in markets for 50 years. Give us a like, give us a follow, and let your friends know if any of you have heard friends asking, I'd love to start investing, but I just don't know where to start. I find it too intimidating. Then these guys are the least intimidating two out there that you'll get. We'll see you next week.